Hey guys, what's up? PipSnipers here, back for another update. Let's take a look at XRP over here. And what we see over here is what's called trendline liquidity. We have been holding above this trend line for over 80 days. So we have many market participants putting their stops underneath the trend line over here. So what is this called? This is called our trendline liquidity. So the price is likely to take that out. But before we do that, we're likely going to come down towards this trend line sitting over here at 0.55 to 0.54 around the 70.2 to 78.6% fib. You guys see that 0.53 to 0.5241. So around there, and that would be right at the trend line. Okay, so we'd probably wick there, see a little bit of a retrace, but then continue down lower. Now, I've seen a lot of analysts there on Twitter, and what I've seen out there is that they think it's going to break out of this pennant over here, right? A lot of people are thinking that. But I don't think the price will move so perfect, and the people who control the price will allow such a perfect entry like that. Just to long this pennant. I don't think it's, I don't think it's, I'm not saying it's uncertain. I'm just saying it's less likely than if we were to first come down to 0.5241 to 0.5330 at the 702.786 at trendline support. Okay. Now, what crypto tells us is that when the price comes down to a trend line, it's, especially when it comes down to it the fourth time, it's likely going to be the one that breaks through it. Okay? And XRP is not immune to things like this, right? You see this over here was a pennant, right over here. You could say that was a pennant, but this over here was just a move to take out your trendline liquidity from people putting their stops over here like that. You see, and then they close there. They close their positions, and then off we go, right? You get a nice short squeeze, and we should see that, right? XRP is not immune to moves such as this. You see how apparent this is, right? Stops, and all of those stops get flushed, you see? And then it moves back to their entry. So this is their, that was their, sorry, this over here was their stops, and then it moves back towards it after they all get stopped out, you see? It's just the way the market works. It needs to repaint and go back to fill inefficiency, right? It needs to reset itself because right now it's unbalanced. You can think of it like that, like a pendulum. Okay, so now this is the bearish scenario. Bearish scenario says that we come down to the trend line, but what crypto says is what crypto tells us in the past or in history is that trend lines don't like the hole, so we'll likely see a retrace and then come down towards the macro 702.786 measured from our July 4th low or July 5th low up to our July 31st high. Okay, likely come down to around 44 to 43 cent, 45 to 43 cent, and then see a nice pop up from there. Okay, now this is the bearish scenario. The bullish scenario states that this trend line holds. That would be the bullish scenario. And if it doesn't hold, then it will likely come down towards the 702.786, which would be this trend line right over here, but you would then need to see a bounce and a sustained move. You see what I'm saying? So we can avoid the possibility of something like this, where we come down towards the 702 and then rally from there. Hope you guys enjoyed the video. If you have any questions, please feel free to let me know. And if you want to stay updated with this analysis, then definitely click the link in the description below to join the Discord. Peace out and take it easy. See you in the next one.